going on, guys? Investment Coach Chris here. Hope you guys are having a great day. What we're gonna do today is we're gonna look at some very super basic concepts for stocks. What I have here on the screen is just a 180-day 4-hour SPY chart, and if I click and zoom in, you can just kind of look at the stock in general. What we have is we have time frames over here. So these black and gray in the background. This gray right here will represent the 8th. This black will represent the 9th. This will represent the 11th, the 12th. So every time you look at that, you can see the black and gray in the background. It kind of goes in an alternating pattern for days. Now, one thing you'll notice is if we go here and we go, okay, 1, 2, 3, 4. Okay, so this is the 19th, 20th, right around the 21st. So 18th, 19th, and then 20th, and then 21st. 18, 19, 20, 21st. That's about 4 or 5 days. That's 4 days. So during this week, we had a really big up pull. So one thing I like to do is I like to take these blocks of gray and I like to set 3 in a row, like 1, 2, 3. So the far right block and the far left block, there's usually little gaps in here, or there's little consolidation points, and I like to trade between those. Now, each one of these candlesticks represents a 4-hour time frame. So if you don't know what a candlestick is, these green and red things are candlesticks, right? So one thing that I recommend that you guys do is you learn to look at the gray and the black as different frames of day, and learn how to use that to, and I'm just zooming in and out when I'm doing this, just going in and out with my mouse. If I click and zoom, it just zooms in. That's all I'm doing in case it's confusing you. So we're here, zoom in, zoom in. So if you see, this is the SPY, which is pretty much, you can look at it as the S&P 500. It's an ETF that I use to help monitor and understand what the SPF is doing during that day. If you look at this, you can just kind of see we have a blank stock chart here. Now, if I decide I want to get a little more technical, I can go over here and go look at my studies. So over here I have sets. I have a basic set right here, which is I'm gonna use my daily SMA. That one's okay. An exponential. So, and I'll do okay. So now if you see, I have some lines that I've put into this stock chart. So before there were no lines, and now there are lines. So basically, if you see, what we're looking at is we're seeing this blue line come up, come down, come up, come down. But you see how a lot of times we're right above this green line, right? Like from here, which was April 4th, all the way to here, which was 6 months. So for this 6-month period, we went up, came down. See, if you really look at this blue line here, you can see this blue line. We went up, came down, went up, came down. Then we started up, and now we did go down. We had a sell-off, and then we went below the blue line. One thing I like to focus on when it comes to these blue lines and these patterns and things of that nature, I like for the blue line, in this case it's an exponential moving average of about, what is this time frame on this one? I gotta remember the exact time frame. 20-day. That's a 20-day exponential, and I'm comparing that with a 180-day simple average, simple moving average. So one thing I like to do is I like to have that exponential go up and down, up and down, up and down, but always hitting up top the green line and pushing up. Now this is going to give a general direction for the U.S. market, in my opinion. So if you have stocks that tend to do good when the U.S. economy does good, or stocks that tend to do good when the U.S. economy does bad, in my opinion, it's good to have both in your portfolio, so you can have the option of choosing either one at your discretion. So guys, I'm investment coach Chris. I hope this simple day candle analysis was helpful for you. Please, I'll post and subscribe. Subscribe to YouTube, post questions, do all that, and I'll make more videos. You guys have a great day.